Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. This morning, U.S. CPI came in soft. Now, you had the Bank of England as well as the ECB meeting. They didn't move and shake the market much. They stayed in line with expectations. No rate hikes there, of course. That wasn't expected. Mario Draghi took a little bit of a hawkish tone, arguably. They're expected to start winding down quantitative easing next month and through the end of the year. But the real headline was U.S. CPI. It came in soft. This hit the dollar and it supported the euro. And what Draghi did was really continue to support the euro because we've seen it many times before. You get a directional move, whether it be from the ECB or data coming out at 7:30 a.m. Central Time, and then Mario Draghi moves the market back in that direction. So we saw the euro rise on that CPI number because of a weaker dollar, and Draghi continued to support it. Where do we see the euro right now? It's right below 117. We have major three-star resistance overhead, and our momentum indicators now align with the resistance level as support. This was resistance at about 116.40, so now this is support here, and the market has some momentum as long as it can stay above there. So watch for this. And what do we have coming out but more data from the U.S. tomorrow? We have retail sales at 7:30 a.m. Central Time, and then the first read on September Michigan consumer sentiment data. So both of these are going to play a big role in where the dollar index as well as the euro are going to finish the day. So remember, you have a lot of resistance up there in the euro, but if you can get out above 117.5, we could get a bullish leg higher. You could get some short covering too. So watch for that. For the dollar, you got to watch the downside. Momentum indicators right around 94.70. Today's high 94.90. You got to see it stay below there. But we're still facing a lot of support, right above 94, the previous lows. We need to get below there. We're going to close below there tomorrow. The same way you have the 117.5 of the euro. Can we break out of this range? That's the question. And you have the technicals here, and then you have the data tomorrow to watch for. Now, moving on to the yen, it's below 90. We've talked about this being weak. You want to be a seller on pops, but you want to make sure it closes below 90. And we're seeing some weakness here today. You got equity markets strong, and this comes despite the weaker yen comes despite the weaker U.S. dollar. But that's because of the stronger equity market here today, and a little bit of a risk on sentiment. You don't need the safe havens, I guess you could say. Now, moving on here to the Aussie dollar. Employment data beat expectations yesterday, and it's helped support what you can call a recovery here from the lowest level dating back to February 2016 here in the Aussie dollar. So you're seeing it stabilize around 72. It's not much of a trade here. You can take some shots down here, but this is a weak market, and it's going to rely on the headlines due to trade. 73 is going to be a really hard ceiling for this thing to get out above, so keep that in mind. No data tonight of Australia. And then we have the Canadian dollar. We like this Canadian dollar, but now you have momentum indicators catching up to that spike from late in the session Tuesday. So where we're running into major three-star resistance out above 77. The market's stalled there, and we're starting to come back in. We want to see the Canadian dollar hold 76.5. Must hold that. If it gives up the ground below 76.5, sellers can retake the driver's seat there, so watch for that. Give us a call. We're here to help with anything on the board, currencies, commodities, agriculture, commodities, gold, bonds, anything. We're here to talk about it with you. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.